everyone, my name is Barbara. You can call me the girl who trades. In today's video, I want to explain how I caught this amazing 1-to-5 risk reward ratio trade on Euro USD and how I managed my emotions throughout the trade playing out and how you can do the same. Quick disclaimer, please. This is not financial advice. It's free information you can find anywhere on the internet and I'm sharing with you. Please make sure you've done your due research before you venture into forex trading because it carries a substantial risk to your capital. Thank you guys. Let's go into the chart and learn something new today. Hi guys, so this is the Euro USD chart and I've used the replay tool to send it back to I've sent it back to 14th November. That's on Sunday at 11. This is a 4-hour chart. So on the 4-hour chart, you can clearly see that price is making lower lows and lower highs. You come another low. This high was lower than the previous one and then made another low right here. I tried to catch this retracement. So try trading in the opposite direction. So I took a buy that was on early Monday morning. So let me go to the 1-hour chart because that's where I take most of my entries. So if we come to the 1-hour chart, we see this. Let me just get this out of the way. Now on the 1-hour chart, you know, this strong bullish candle. To be very honest with you, I shouldn't have taken this buy trade because I didn't have all the confirmations I normally require and I wasn't trading according to plan. Sorry, noise. I was not trading according to my plan. So I should not have taken this trade. But you know, early Monday morning, I was just very anxious to get into a trade. That's normal, but you have to learn to discipline yourself. That's the most important thing in trading, honestly. And I just want you to know I'm just being honest about how I ended up taking that trade. It happens to all of us. You still sometimes feel like, oh, I haven't taken a trade in a long time. Let me just take this trade. I'm sure to play out. But honestly, it didn't satisfy all my confluences, so I should not have taken that trade. And truly, I think I took this buy. I took it somewhere mid candle when it broke this previous high here. So when I took this trade, unfortunately, bam, if I fast forward, it just came and hit my stop loss because my stop loss I think was below these lows right here. So just hit my stop loss, took me out calmly. And I accepted it with grace because I had risked just 1%. So I was like, it's cool. I've lost 1%. If I do catch a good trade, I'll probably get about 3 to 4%. So it's okay. Like I just let it go. So after that, I realized that no, so you can see how far down this trade went. And then I was like, okay, I will try and catch a retracement and then continue short because it looks like Euro USD is on a bear run for whatever reason. So I was looking for a retracement opportunity and then I would short Euro USD. So that was my plan, that I would trade I will trade with the trend and not against it. It's difficult to trade against the trend, honestly. It's very difficult to trade against the trend. So I was like, okay, I'll try and catch the move continuing the trend, the next move with the trend. Okay, so I think this was around, yes, so when it hit this area, it started coming, it retraced slightly, but at I think, yes, at 21 hours now, the retracement, it looked like this retracement was going to be a good one. And I mean, of course, in Ghana, this was about 8 p.m 9 p.m, which isn't the time I usually spend on the chart. I try now because of work and school. I look at the charts in the mornings, not in the evenings like I used to. Sometimes in the evening I'll take a glance, maybe map out a few things, but I really didn't see this trade at that time. So I think I woke up to feed my baby and then I saw that the price was like slowing down at the top here. So around 5 a.m., which is usually the time that I wake up to go to work, this candle had closed, and this is when I entered. Now I've been learning a lot about institutional trading and stuff like that, and like trying to understand institutional trading. I mean, you don't take anything off. We all trade price action. So I've been looking for more confluences to, like, you know, find a better edge. So I've been looking at institutional trading now a lot. Now, if you are an institutional trader, then likely this right here, this would have been an order block. And for institutional traders, most people will probably leave an order, like they would leave an order here, sell stop here, so that when price hits this area, they would sell, and that will give them an insane risk to reward ratio. So that means that for this trade, they'll probably be risking just about 8-7 pips for the trade. Unfortunately, I entered this trade after this candle was closing. I think I entered after the candle had closed, so I ended up risking about 12 pips. Honestly, if I remember correctly, I risked 12 pips on the trade. I think I entered just before this candle closed. So what I risked on the trade was 12 pips. Now this 12 pips, you do see that I have some points marked out on the charts. Those are my psychological levels I use. If you want to learn more about psychological levels, please go to Jeffrey Benson's channel. He talks a lot about psychological levels. So these are the psychological levels that I use. So normally my target is just 10 pips before the next psychological level. And I risked 1% on this trade, and my take profit was 5.37. However, if you're careful, you can see here that this area serves as a support. So I left an alert at this area. So I created an alert at this area. Let me just put it there so that we know. Okay, this is in replay mode. But yes, I left an alert at this area. I'll put a line there to signify that point. So I put an alert here that if price did reach this area, I would receive an alert, so that I could tell if price broke the area, I could move my stop loss to break even, because it's broken a significant support and I can move. So this is when I entered the trade. I entered a trade around 6 a.m. when I was just about to leave for work, and then left the trade to run. Now I want to move to the 15-minute chart so that we see how the trade actually played out and the emotions involved. So on the 15-minute chart, you do realize that there wasn't too much movement. Now, as soon as I entered, price retraced significantly. Again, if you are an institutional trader, you will know a few things about the way price moves. So yes, it came down a little, retraced again. I'll just continue playing. It came down. So it wasn't a quick thing at all. So you realize that this candle didn't break the support, and you realize the support has been tested once, twice, and then this is the third time on the 15-minute chart. You have to be careful here, because someone would have decided to go long from this point because of this resistance, but the overall trend is significantly bearish, so that would be a bad move to make. So yes, at this point, when this candle broke this support, I moved my stop loss to break even, and hence, once my stop loss is at break even, it means that this trade is now running risk free. There are times when I move my stop loss to break even, I take about 20% of my profits off, just so that I know that I've made some money at the end of the day. In this instance, I did not, but normally sometimes that's what I do. So continue playing. You realize that price, if I continue playing, price came up again. So if for institutional traders, you know that there was a bit of inefficiency here that needed to be filled, and that's what was done. So I really didn't panic at this point, because of this inefficiency. There was a small inefficiency here that was just filled, so I knew that potentially price would continue downward. And this huge candle also had some inefficiency that I knew would be filled. So we started on a downward trend again. Let me just play it forward. These huge candles came after some news, some US news, and the initial reaction after the news was these 3 bearish candles. So I know people were a little shaky about the trade. I wasn't, because I knew the news was very positive for the dollar, so I knew that the euro was probably going to sell off against the dollar. So that's what happened. This huge bearish candle, coming into the picture. And of course, with all this inefficiency, this huge candle had a lot of inefficiency. So when this trade was going up, I wasn't again worried, because I knew that the inefficiency had to be filled. Okay. Around the price, yes, so around this area, however, when this minor retracement was happening, at the time the trade was up about 4%. I think about this point right here, my trade was up about 4%. And so yes, about 4%. And so yes, I did take I took off some of my profit. So I took about 75% of my profit here, and then I left the 30% to run. I left the rest, the 25%, to run, and eventually that also hit take profit. So my take profit was hit at this time. So I just want to look at the overall time, the time it took for the entire trade to play out. That was a total of 16 hours. Now, if you don't get used to knowing how long your trades take, you may end up panicking because you don't know how long your trade is going to take to play out. You realize there were a lot of retracements in this particular trade, and you have to get used to knowing that my trade will averagely take 18 hours, 20 hours, 24 hours to play out, so that you don't panic when the trade is taking too long to play out. A quick one, how I calculate my position and make sure I'm risking just 1% per trade is that I use the baby pips position size calculator. So as it's running here, I'll enter the amount. So in this instance, let's say if I'm trading a $10,000 account, I don't want to reveal my actual accounts because we are working on something and it may not be ready this year, but next year, God willing, I will explain everything about this account. But yes, so if I'm trading, say, a $10,000 account, I know that's $10,000. Now I put in how much I'm willing to risk, that's 1%, and then it will tell me, I put the currency pair, and then it will tell me how much I must trade with in terms of position size, so that I risk exactly that. Anyway, I also have to input my stop loss, so that it can tell you, depending on the stop loss, how much you should trade, so that you don't end up like over risking on the account. That's very important to know. Okay, thank you guys for watching today's video. I hope you've learned something. If you have, please give this video a like, subscribe to the channel for more content about forex trading. Disclaimer again, I'm not on Twitter, I'm not on Facebook, I don't have a Telegram Signal page. I will never ask you for money for anything. Please remember, I'll never ask you for any money for me to trade for you. I won't do that. So thank you for watching. Till the next time, it's the girl who trades.